Hola, soy Luis Doldán y hoy vamos a hablar sobre Aurcana Silver Corporation, una empresa de plata, una empresa minera de plata en Estados Unidos, con dos proyectos muy interesantes, uno en un pueblo de Colorado que se llama Ouray y otro en Texas, en la frontera de México. Tanto yo, personalmente, como Kevin Drover, el CEO y presidente de esta compañía, creemos que el precio de la acción no refleja los fundamentales de la empresa. ¿Por qué? Va a empezar a producir en julio, va a haber noticias sobre que han empezado a producir y se va a reflejar el flujo de caja tanto en el mes de septiembre como en el mes de enero. Eso los inversores lo van a ver de forma muy positiva, ya que han quitado todo el riesgo operacional que tiene construir y desarrollar una mina. Luego, al otro tipo de inversor es ese que ve una empresa a 4-6 años vista, ya que Aurcana va a empezar a producir entre 3-4 millones de onzas al año, pero va a seguir desarrollando tanto el proyecto de Colorado como el que tiene en Texas, hasta una producción anual de entre 8 y 9 millones, lo cual, si el precio de la plata está a 30-32 dólares y el coste total de producir cada onza es de 10 a 12 dólares, va a estar generando 20 dólares de flujo de caja libre por onza. Es decir, hacer vuestra multiplicación de lo que creáis que va a producir esta empresa. De entre 3 a 8 millones, vamos a ponerle 5. 5 por 2 son 100 millones. A una empresa que cotiza 200 millones de capitalización bursátil es muy barato. Como siempre, ya lo pondrán. No es una recomendación de inversores, yo personalmente la tengo y creo que esta empresa puede ser muy buena para el bull market que se avecina de la plata. Este proyecto lo compraron en 2018, cuando prácticamente, finales de 2017, cuando nadie estaba interesado en la plata. Entonces pudieron hacer un acuerdo muy bueno para los accionistas, lo compraron bastante barato y aparte se han puesto en la tierra, en el proyecto, muchos millones de dólares que tú como accionista ahora mismo no vas a tener que pagar por ello. La entrevista que hacemos con Kevin Drover es en inglés, entonces va a haber conceptos, tecnicismos que posiblemente muchos no entenderéis. Entonces vamos a intentar definir alguno para vosotros para que digáis, bueno, esto significa esto. Por ejemplo, el PEA es cuando una empresa minera tiene un depósito interesante y lo quiere estudiar, lo quiere desarrollar. Entonces lo que hace es contrata a una empresa independiente que haga este estudio por ellos y se muestre la viabilidad de este proyecto con los recursos que hay de plata, de oro, lo que sea, para ver si es económico y para saber cuántas onzas hay, para saber cuánto van a poder producir al año, el molino que van a necesitar, etc. Ese es el primer modelo, el PEA. Luego está el Feasibility Study, es el estudio de viabilidad, que básicamente lo que hace es ya podemos desarrollar la mina, ya sabemos todo lo necesario, lo que nos va a costar, a quién se lo vamos a vender, todo. Entonces es cuando ya la empresa está sin riesgo, el único riesgo que tienen es el operacional, el riesgo que tiene construir la mina, que no haya una avalancha, que no haya una inundación, que los managers no les pase nada, etcétera, etcétera. En torno al CAPEX, es el Capital Expenditures, es lo que va a costar esa inversión. Por ejemplo, en el caso del proyecto de Colorado, ya se ha pagado con esa deuda. Cogieron 28 millones en deuda más el efectivo que tenían en sus cuentas contables para pagar ese CAPEX de 35 millones. Un CAPEX que pagas 35 millones el primer año y vas a poder generar más de 50 millones en flujo de caja libre es una muy buena inversión, o por lo menos yo lo veo así. Y para el proyecto de Shafter en Texas vas a necesitar cerca de 28 millones de CAPEX, redondémoslo a 30, lo cual que con el flujo de caja que van a producir en las operaciones van a pagarlo seguramente fácil. Aurcana es una empresa ahora mismo con deuda, con 30 millones en deuda, lo cual no es prácticamente ni un 10, un 15% de la estructura, de su estructura de capital, y generando 20-30 millones que van a producir de aquí a fin de año, seguramente la puedan pagar y sea una empresa sin deuda muy interesante para vigilar. Así que, sin más dilación, dentro vídeo con el CEO y presidente Kevin Drover.
Well, it's my great pleasure to introduce you today to Kevin Drover, President and CEO of Aurcana Silver Corporation. How are you today, Kevin?
Great, thanks, Louis. Great, good to be here. Looking forward to having a chat and telling you a little bit about Orcana.
Nice. Thank you for coming to the show. Well, a lot of people listening doesn't know about the company. Can you tell us briefly what is Orcana? And I take it from there.
Orcana we're a silver company. Both of our assets, we have two assets, both of which are fully permitted. Both have mills, processing facilities, and we're located in the United States. Our primary flagship that we're putting into production is in Colorado. And the area that we're in has a long history of mining in that area. The other asset that we have is the Shafter mine located in Texas, not far from El Paso, Texas. Texas is a really good place to do business. So yeah, we're silver and we're all located in the United States. So it's a good jurisdiction to be in.
It is, I believe. Okay, now that you have introduced Orcana to the audience, why people, why retail investors? Most of our audience is retail investors. Why should they pay attention to silver, the metal, and more so to a silver miner like Orcana?
Well, I think silver has got the wind at its back right now, given the renewable drive based on the Paris Accord in the United States now, coming back into that. I think that the demand for silver as part of the photovoltaic, as part of the wind, part of the electric vehicles is going to get a boost. I think there is, less and less mines and not pure mine silver producers in place these days. So I think silver has got a pretty good, future given where we are going with renewables going forward. Orcana, of course, being nearly pure silver players, the Shafter mine is pure silver, no byproducts. The Revenue Virginius mine that we're putting into production, it does have some lead, zinc, and a little bit of gold, but primarily about 71 to 75% of its revenue is derived from silver. So Orcana right now with our near-term production, we're going to be in production in July. So that's how close we are. We're fully permitted. All of our processing facilities are in place. So we're just going to be starting commissioning the plant here in the next couple of weeks. So, from an investor point of view, if you like silver and you like pure silver companies, Orcana right now is the closest to production probably of any company out there that's in certainly the continental United States.
Yes, we as investors, we are really excited about that. And I think the key thing is the leverage that Orcana has for investors, because correct me if I'm wrong, for each dollar increase in the silver price, you get directly to your bottom line between 3 and 4 million. And that's quite exciting, right?
Well, that's exactly true. We did our feasibility study at $18.50. And of course, the price of silver right now is just over almost 28, I guess, this morning, something like that. So that all goes right to the bottom line. In the first couple of years of our operation, we're looking at around between 3.5 to 4 million ounces of silver equivalent production. So, we're going to be throwing off a lot of cash flow. And certainly our share price at the moment, and if you compare it, we don't have a lot to compare it to, but if you compare it to one of our peers, which say would be Alexco, Alexco is double our market cap, and yet they're at the same point in their life as we are, just coming online, going into production, producing about the same kind of thing. Yet their market cap is twice ours. So we certainly believe that we're undervalued significantly at this stage of the game. So we're looking to see a re-rate of the Orcana stock once we get ourselves into production.
I hope so too. For everyone to be on the same page, Orcana trades in Canada in the TSX Venture under the ticker symbol AUN, and in the OTC market under the ticker symbol AUNFF, with a market capitalization of around 220 million US dollars currently, something like that. So that being said, I would like to ask you, when did you acquire the property? How much did you pay for that, if it's publicly? And how much have been spent for prior owners in exploration and development of that asset?
We acquired the Revenue Virginius mine through a reverse takeover that was completed in late December of 2018. And we put the two companies. Pardon me?
In the bear market, when silver prices were depressed.
Exactly. It was the worst time, probably, you know, certainly from a silver market perspective. And the way we put the company together was really based on a ratio of what we perceived the value of Orcana with just the Shafter mine versus bringing the Revenue Virginius mine. We lined up the two. We went and did our PEA level at the Shafter mine versus a feasibility level at the Revenue Virginius mine. We put the two companies together on the basis of 75-25. Shafter at about a $25 million NPV, and Revenue Virginius at $18.50 at 75 million NPV. So we put the two companies together on that basis. And our shareholder, our largest shareholder, which was Lascaux Resource Capital at that point in time, was the owner of the Revenue Virginius mine. So they came in as a 75% owner of Orcana. And we've since diluted them down, you know, because we had to raise money. They currently own about 32% of the total company. In terms of how much money that has been spent, there's been 3 owners of this project since probably 2013. Star Mines came in here and they built the mill. They put the mill underground, spent about $55 million. Fortune Minerals came in and bought it. And spent some $30 million additional dollars. Lascaux Resource Capital, when Fortune didn't perform, took the project back. They spent another $25 million on feasibility studies, so on and so forth. And then I came in and bought it basically from Lascaux, put it into the public company, and we've spent since probably in the order of another $40 to $50 million, and we're just about ready to go back into production.
Wow. So a lot of money put it into the ground, and you picked that asset in 2018 for 20 cents on the dollar, right? Or exactly right. So it's and now, you know, we're poised, you know, to take advantage of the market where we've seen this big jump now in the silver price. I think you know, I think we should do well here. Okay, you said some minutes ago that production is going to start in some weeks, July, August, kind of thing. How is everything going to meet that goal?
Everything's going very, very well. We're going to meet our goal. You know, we picked a date of July 10th to putting first ore through the mill. More than likely the week of the 21st, maybe late next week, we'll be commissioning. So we'll commission the mill underground in our development process. We're right on schedule, maybe a little bit ahead of schedule to get ore release out. So we're right where we said we were going to be on both the schedule and on our costs. So we're going to have ore going through the mill in July. We should be producing at half production. Hopefully we'll do better than that in August, and we're looking to be full cash flow positive in September.
Wow. Nice. That probably will re-rate the stock that we have talked about. This a common chart that a lot of people know, which is the Lassonde curve. And you are in that perfect spot that you have the feasibility study, you are going to start production, and the market haven't realized yet the full potential of Orcana. And it's right now, Orcana, from my point of view, is like a show me story. Show me the cash flow in September, show me the cash flow in January, and we will give that re-rate potential. And I believe that, I believe as well that full disclosure, I'm a shareholder of Orcana, watching the company for 2 years or 3 years already. Mm-hmm. So you should be really excited about the start of production.
We are very excited, you know, to say the least. We're right on the edge now. So we're, you know, this is the busy time when we need to execute properly, and we're doing that. So things are going well.
Okay, you said that what is the yearly target in silver ounces? How many ounces you are going to produce per year? And can you ramp up production from there?
Yeah, so the strategy that we're looking at right now and the plan, and be very honest. So the feasibility study and all of the economics you see out there in the market is all based on 270 tons per day going through the mill. We have a mill that's rated at 550 tons per day. We wanted to start up at that 270, get our costs in line, get our productivities in line, get our metallurgy sorted out. But with that added capacity of the mill, we see opportunity where we can increase our mill throughput by bringing other stopes. So in the mine itself, we need 2 operating stopes to deliver that 270 to 300 tons per day. By the end of this year, we're going to have 4 stopes available. So we're looking at early in 2022 of bringing a 3rd stope into production. Now, you would never bring all of your stopes. So you would never bring 4 online because you need an emergency area to go to. If something happens to one of the ones that you're operating, something happens in it, you need some other place to go mine. So you always need a spare. So we would look at bringing 3 online, which would take us to 400 tons a day. And then that would take us close to 4.5 million ounces production on an annualized basis. In late 2022, early 2023, we could see our production being further developed to the point where we would have more than 5 stopes available. So that way we could bring a 4th online, which would take us to that 5.5 to 6 million ounce producer in 2020, late 23 probably. At the same time, we're currently doing some work and a fair bit of work on resource estimates and whatnot on the Shafter project. Now it's fully permitted. It has a 1,500 ton a day mill on site. So it's ready to go. But it's at a PEA level. We want to do a little bit more drilling. We want to do a little bit more metallurgy. And we would like to do a feasibility study come this fall. So we see it coming online in 2024, maybe late 2023. And that would produce between 2.5 to 3 million ounces of silver. So that takes us to that 8-9 million ounce range producer. So mid-tier producer in 2024. So a lot of that organic growth at the Revenue Virginius mine. Then we bring on the Shafter mine, and that puts us in a very good place.
Wow, 9 million is quite a lot. It's a mid-tier producer already. And
exactly.
Okay, can we talk about the economics of
Sure.
the project with a market capitalization of, I said, 220 million? What is the NPV of each project? How many free cash flow is going to generate in the first years, which is 3 million ounce per year? And yeah, the all-in sustaining costs, like some of the economics, because I believe this can be a cash cow.
Yeah, it really is a cash cow. So all of our economics, as you know, is done at $18.50 silver, $1,300 gold, and $1 lead and $1.20 zinc. So at those prices and producing 3.1 million average ounces per year, we're looking at an NPV of 75 million and an IRR of 71%. At $26, where we ran the numbers, our model the last time, our NPV goes to 178 million and 147% IRR. It gets a little crazy as you go higher than, you double it up to 30, $35 or $50, then you can imagine what the cash flow is. But maybe more importantly for your listeners is that the first couple of years, we're into some very high grade. So the grade, we pull grade ahead. So in fact, although we show our production as 3.1 million ounces average, the reality of it is we're going to be 3.5 to 4 million ounces in the first couple of years. So when you look at that, at the current prices, at our all-in sustaining costs, we're looking at in excess of 50 million after-tax free cash flow. So that, in the first couple of years, and we believe we can probably maintain that. As you know, right now, our life of mine is about 7 years, but before we even get into production, we should be at 9 years, and we have 9 veins that we own on our property. All of our known reserves are on only 4,000 feet of one vein that is 16,000 feet in length. So, and we're open both north and south on that. So we think that, you know, we would be on that one vein, and we ran mine plans on this, but it's 20 years just for that one vein. So we haven't done a lot of exploration and a lot of work on those other veins because, you know, quite frankly, you know, we've not had the money, and our focus has been, let's get to production. We do not want to be spending, you know, our investors' money raising capital. So we'll have a lot of cash flow coming off of this. We'll be able to do, you know, considerable amount of exploration. But, you know, from an economics perspective, this thing just throws off a huge amount of money. So now we do have some debt. We took on a $28 million debt facility. So, you know, we'll have some competing needs for that cash flow. One will be, you know, do we repay that debt because it's fairly high cost? Or, you know, we could, once we're in production, we can probably get cheaper debt if we wanted to replace that facility. We will have, and more than likely, based on a positive feasibility, you know, a need for cash to bring Shafter online. You know, those, and we of course will want to do some exploration. So there'll be some competing needs for that, but you know, we'll make that decision when we get the money in our hand.
Okay, coming back to one thing that you said, because for me it's quite interesting. The feasibility study says that it's a 7-year life of mine, and you said that maybe it's a probability that before you come into production, you can expand 2 years more of life. Maybe investors can expect a press release about that bluegrass exploration.
Well, it's a little more complicated than that. If you were to look at our presentation that we have online, there's a slide that we have there, and we show where our measured and indicated resources are. And in the one area, we've got a pink and purple, and that's the measured, and the purple is indicated. In another area where we're going to be mining, can I share my screen here?
Yes, for sure.
Okay, let me just pull up because this is something that I should explain properly. Let me do that. Orcana. Bear with me just a second, and I normally have this open, but my computer decided this morning to update itself.
Because it's quite interesting that you have only explored 20% of the land package that you currently have. So
exactly, yeah, absolutely. And so let me share my screen now. Get rid of this. Okay. And can you see that?
Yep.
Okay, so I'm just going to go to a slide. This one right here. So right here, this is the area that we're going to be starting to mine in first. So the purple right here is the indicated resources. So that's in the feasibility study. The pink and the purple down in this area is in the feasibility study, as is this area right here. But the green that you see is inferred resources and is not in the feasibility study. But the reason it isn't in the feasibility study is because we couldn't get in a position from surface to be able to get a drill hole in it. But we know, you know, this is epithermal gold system. So we've got good drill density down here. We got good drill density down here. And the way the epithermals work is it comes up from the bottom and goes up. So there's absolutely no reason to believe that this green area is barren. So this is where we say, okay, it's not, but we're going to actually mine it. So right here, this is our mine plan as it's not the feasibility study, but this is what we're actually going to do, is we're going to mine this whole thing. That gives us an added 2 years to do that.
Okay, understand.
So here, and just while I got this up, it might be for our viewers and listeners, the first two stopes are coming from this area right here. So this is 1,000 feet long from there to there. Each of our stopes are 500 feet long by 300 feet high. So there'll be two stopes there. We'll have two stopes on this level, two stopes on that level, two stopes on this level, that kind of thing. So we're in pretty good shape. So we're going to be out here. This is unexplored, but the vein comes right to surface up in this area. We do have some sampling on that. So we fully intend that once we're on these levels, we're not just stopping where that yellow ends. We're just going to keep going.
Okay.
So
and
that's where.
Two stops for the 3.1 million ounces, right?
Say again, please.
You only need two stops for the 3.1 million run away.
Yeah, exactly. And the grades up in this area right here are well above the average grade of our average grade of the deposit is 37 ounces per ton. We're going to be in the range here of between 45 and 50 ounces per ton.
This is a really high grade mine. I believe it's the first or the second most with better grades in the world.
I don't know of any other mine like this that has a proven and a probable reserve with this higher grade. There may be places in Russia, I don't know, but I don't know of any at this stage. So if we're not first, we're second, probably.
A lot of people don't know about what we are talking about, but is that your costs are really low compared to the peers in your industry, which is going to be like around $10 per ounce.
Yes, that's correct. The feasibility says basically that our all-in sustaining costs, and I'll talk about two different costs here, just so that everybody knows, but I'm going to talk first about on a pure silver basis. So on a pure silver basis, if we didn't take any of our lead, zinc, and gold as a silver equivalent, but so we just look at pure silver, our cost would be $8 an ounce based on the feasibility study. But what we've seen in the process of starting up is we've seen some price inflation. We've seen labor costs increase from what was put into feasibility study. We've certain steel, everybody knows steel and lumber, and we use a fair bit of both of those, wood and steel, has gone up quite considerably. We're not a fossil fuel consumer. We're pretty much all electric. So we don't have emissions or so the fuel doesn't affect us. But we've seen the prices go from that $8 an ounce up to between $9 and $9.50 an ounce. So that's the price pressures. Now, if you look at it on a silver equivalent basis, then, as per the feasibility study, our all-in sustaining cost was $10.71. We're now looking at about $12 on a silver equivalent basis. Still one of the lowest cost mines, of this type in the world for sure.
I mean, if silver goes to 32, if your all-in sustaining cost is 12, you are making $20 per ounce at
exactly
60 million free cash.
Exactly.
Okay, that's good. Can you go in detail into the share structure of the company? You have said that you have a debt facility. Does it has covenants? Are you hedged in that debt position? And we take it from there.
Yeah, we have a debt for $28 million debt facility with Mercuria Energy out of Houston, Texas. Mm-hmm. It's a five-year facility. There was a 1-year grace period where the only thing we pay is interest on that. That first year expires on December the 8th. So anytime after December the 8th, we can prepay it without penalty after that. It carries a 14.5% coupon plus LIBOR until we reach a production target of 400 tons of concentrate per month, which we should see certainly in the fall of this year. And we'll probably be much higher than that. So once we reach that, the coupon drops down from 14.5 to 10.5 plus LIBOR. Mm-hmm. But the key with us is that there's nothing else. There are no warrants with this or any. It's a pure debt facility. and we can prepay it at any time. And, you know, based on the cash flow, we should either be able to replace it for a much lower debt cost or pay it off completely. As far as hedges is concerned, yes, there are some hedges that were put on here. We hedged about 29% of our silver production, and we're right around, I believe, 23, maybe a little bit higher than $23 an ounce for that. But that was done to cover the loan repayment and as part of the facility. If we pay the loan off, of course, we can do whatever we want with the hedges at that particular point in time, depending on what the price of silver, of course, is. But of course, you know, 71% of our production is at whatever pricing we want to use beyond that.
Market. Okay, that's good. And do you have any plans for the lead and the gold? Are you going to stream out those metals, or are you going to sell it at market price as well?
No, we have an offtake agreement with Trafigura, a very reputable company, to take all of our concentrates. So the lead, we make two concentrates here, a lead and a zinc concentrate. We don't make a copper yet, but some areas of the mine have some, you know, payable copper. And we have a copper circuit in our mill. But right now we're making only a lead and zinc concentrate, and the gold and the silver go with the lead concentrate. So that is the important one overall. And Trafigura, that's the off-taker. They take that. They buy it at our gate. So once we put it on a truck to ship it, they pay us 95% of the value of that, which certainly minimizes our working capital needs, right? So no, right now we don't see any need for us to stream any of our metals at all.
Okay, that's good. Can we go to, I have a lot of questions, sorry, to the Texas project, the Shafter project. I know that sure. Peter Maga, a well-respected name in the industry, was the technical consultant. Can you share anything that is not publicly in the PA already that your people working there has seen and they see potential in this project?
Yeah, you know, we do, certainly with the price of silver where it is. You know, the PEA that we have out there, that is public information, the preliminary economic assessment, I think we sit at about $16 break-even cost on the Shafter project. Right now, and I think the CapEx to put it into production was about $22 million US to put it into production. But what we're doing right now is we've gone back, we've taken some of our technical people who have a little bit of time, and we're focused on reviewing all of the historic drilling that was done. And we're focused on the new resource, not on the Orcana, when it tried to put this into production in the past, in 2012, was focused on remnant mining. Mm-hmm. We're not touching any of that. So the resource that we're looking at is pristine. It's never been mined. There is a shaft sunk. There is some underground development done. There was a lot of drilling that was done. And so we're reviewing all of that information, plus the drilling that we've done over the last few years. And what we're finding is that we believe that we can upgrade this resource to considerable more tonnage, especially given the current price of silver. So we're in the process right now of developing a new resource, which we hope to be able to put out sometime within the next 6 weeks, that we will put this 43-101 compliant and put it out. But it looks very positive right now. We would like to do some additional drilling. We believe we can expand the resource on the fringes and add more tons. And what we're seeing today is we're seeing that the ore body is thicker than we thought, and we think it's a bit wider than we originally thought. So we want to do that, but in addition, we want to get some new sample for metallurgical testing. One of the things with Shafter is that the tail grade is relatively high, and at 1.5 ounces because of the very fine ingrained silver. We think we can get that lower, so we want to do some additional metallurgical work. And then we want to begin a feasibility study, subject to money available and all of these kinds of things, that we would do a feasibility study in the fall, and we would have a results of that feasibility study completed early in 2022 and be in a position to make a production decision beyond that. But we really believe that we have at current metal prices of silver, we could turn Shafter into a fairly decent mine, producing something in the neighborhood of 2.5 to 3 million ounces of silver a year for a life of mine, probably in excess of 10 years.
Okay. So when you put Shafter in production, your flagship asset will be the Virginia's mine.
Yes, yeah, the Virginia's mine will go into production this July. We see Shafter coming online, pending a number of decisions that have to be made in late,
takes money.
Yeah, in 2024. So,
okay. Well, for the last question, is there anything that I forgot to ask that do you believe is important for listeners, for shareholders?
Well, no, I think you've covered it pretty well. But from an Orcana perspective, of course, I mean, I think the thing to take away here is that contrary to what our feasibility says, we believe we're going to be around here for decades. In this business, we're in continental United States. We're in a jurisdiction where the rule of law really matters, we've got the price of silver. With all the renewables drive and everything, I think, really nowhere to go but up. Those three things alone, I think, is good reasons to buy Orcana at this stage. And, given where we are, I think we're undervalued. In my opinion, I think we're undervalued by a factor of 3. I think we're 1/3 the value that we should be. So
actually, you are 3% owner of the company?
Pardon me?
Do you have 3% of the stock in the company?
I don't personally, but I think between myself and management and the board, we own probably between 5 and 6%. The Alaska Resource Capital, our major shareholder, they're on the board, and they own 32% of the company.
Yeah.
So
I personally talked to David Kaplan, which is the Alaska Resource, and he couldn't give me any information because he's an insider of the company. But yeah, it's strong shareholders in the company, skin in the game, as I always like to say. So that's
yeah. We've all got a lot of skin in the game, personally. That's to say the least.
Well, so if people like the story and want to know more about Orcana, where they can find more information?
Well, find more information on our website at www.orcana.com, or you can get hold of Gary Lindsay or myself, kdrover@orcana.com.
Okay, we will put the links in the description below. So anyone interested in following the company, they will start production in some weeks. So really excited about that re-rating potential in the stock price that all of us, the investors, want to see. So thank you for coming to the show, Kevin. Thank you for making this possible, and I wish you the best of luck.
Thanks, Luis. Much appreciated. Thank you.